Everyone, it's Don Harkins with Your Florida House Team and Your Florida Loan Team. Today is Friday, February 11th, and I've got just a quick market update for you. We did a long, comprehensive 20-minute update last week, so if you are looking for a more in-depth review of all the factors of the housing market to help you plan your next move or purchase, be sure to check out that video. This video is going to touch on briefly a couple new developments that happened this week. The first thing I'm going to show you here is months of inventory, the number of homes for sale, and year-over-year inventory levels. When you take a look here, you can see we are still sliding deeper into a low inventory environment. Less than 2 months of inventory for sale throughout Florida. Central Florida in many markets has less than 1 month of inventory for sale. So still really low supply issue with buyer demand not showing any signs of weakening. In fact, if you look at BlackRock, and you can Google BlackRock, and you can get an idea from some of the articles about what the level of corporate and institutional buying is in our local markets. But we are seeing large corporations, hedge funds, pension funds continue to purchase an increasing number and an increasing percentage of homes despite rising prices, because rents are rising faster than home prices are. So while buyers are having some issues with affordability, these corporations can still come in, pick up these houses with some lessened buyer demand due to affordability, continue to push the market higher, and at the same time it's creating a affordability issue for owner occupants, people that want to buy regular homes. So we're still seeing that inventory continue to stay at very low levels. As prices are rising, we're not expecting to see any amount of buyer default, or we're not seeing any signs of financial distress like what we were seeing in the previous 2008 to 2012 real estate crash and real estate crisis. In fact, you can see lending standards are still very high right now. In fact, they're lower today than they were in 2019 even. And there's a great index that tracks that called the Mortgage Credit Availability Index. And one thing that was surprising was actually 23% of borrowers in December 2021 had a FICO score of 700 or higher. 39% had a score of 750 or higher, and 14% had a score of 800 or higher. So when we add those numbers up, we're really looking at 74% of all borrowers had a score of 700 or higher in December 2021. So we still have really high lending guidelines and standards. We still have really well qualified borrowers purchasing homes. Don't expect to see these mortgages go into default, or these homeowners getting into situations where they can't afford to pay their bills. One of the big challenges wrapping all this up with buyer purchasing power. If you were thinking about purchasing a home and you had a budget of $2,200 a month back in June of last year, you probably could have gone and purchased a home for about $515,000, give or take, with that principal and interest payment. Today, that same $2,200 a month budget is probably going to purchase you a home for $450,000 or $445,000. So there's an erosion of buying power by $60,000 to $80,000 in a market where home prices have actually risen. If we're talking about the $450,000 price range, home prices probably rose 10% from June last year to today. So if you are a buyer sitting on the sidelines waiting for prices to come down, or you're a buyer who doesn't want to get into a competitive market, unfortunately, when we look at the very low supply, the consistent and additional corporate demand, the strong borrower profiles, it doesn't look like anytime in the near future there's going to be a better time for you to get into the market. In fact, we are starting to see some survey results come in that are saying home price appreciation could be as much as 9% this year. The Fed came out yesterday with an announcement. They expect 4 rate hikes now and may hike rates between meetings. So it looks like more than likely it's just going to get more expensive to purchase in the near future, and at the same time rents are going up. So if you're a buyer and you've kind of been hanging on, waiting to get in the market, reach out to us. let us go over some options for you, how you can be competitive in this market. If you're a seller and you're waiting, you're probably fine to wait another 12 months, wait another 24 months before we see any kind of buyer demand relief, and that may not even occur. But as a home buyer, this is really a time you want to be getting into the market and locking in today's prices and today's interest rates, and creating a new, better home that's more perfectly suited to today's needs for your family and for yourself. So give me a shout, 321-377-0341, if you want to go over any of these numbers in more detail. As always, we can help you whether you're deciding to list and sell your home, lease a property out, if you're looking to purchase a new home, or if you're looking to refinance your existing mortgage or get pre-approved for a new mortgage. We can help you with all those services. Visit yourfloridahousesearch.com or yourfloridaloanteam.com for more information. And everybody have a great weekend. Take care.